Hi everyone, welcome to another edition of Big Business Blueprint live interviews where we speak with one business leader and understand their personal and startup growth playbook, fundraising lessons, products and services they offer, and how they think about their market expansion, customer acquisition, customer retention. Also, more importantly, attracting talent and building a tight knit workforce and so on. I'm Bhuva Shakti, based in New York, and the founder of WalletMax. We are a global community of startups, investors, and executives focused on increasing sustainable funding access, especially in climate tech, fintech, deep tech, and AI sectors. If you are a tech enabled or AI enabled startup from any industry or sector, don't miss out the fundraising event from WalletMax. We have startup pitch competitions and investor panel discussions. It's on June 1st, it's coming Monday as part of New York Tech Week. The tickets are now live. You can see the Partiful registration link scrolling below in the screen. Now, in my Startup Growth Playbook interviews, the one we are in today, I typically invite a startup founder or co founder and interview them about their growth lessons. But more importantly, what differentiates them from the crowd? How do they prioritize impact along with profits and people? We deep dive into their personal and professional journeys, but also how their startup journey has a mission to uplift. Today, we are speaking with Shivam Goyal. He is a serial fintech entrepreneur building at the intersection of consumer lending and AI. Shivam previously founded Change for Change, Stripe for Donations, and was head of product at Tellus, a Series A neobank. Shivam's work on financial inclusion has been recognized by Forbes and the World Economic Forum. Shivam is the co founder and CEO at Merble. Merble is an AI loan officer that helps banks win borrowers before an application starts. So let's get started today. Thanks for joining us, Shivam.
No, for sure, Bhuva, and thanks for inviting me and and saying amazing things about what we're doing at Merble.
Thank you. And to get us started, I want to learn a little bit more about your background and journey towards launching Merble. I mean, how was it like? Why did you launch it?
Yeah, for sure. And I think the biggest realization, and just as you mentioned, my background has been in fintech and then sort of helping consumers navigate financial products, financial journey all throughout. And the realization we had is that the biggest purchase someone makes is their home, as well as the biggest asset someone owns is their home as well. But they're sort of left hanging dry. There's no one helping them figuring out how do I get ready to make this purchase, or I have other needs in the future. How do I leverage my home to solve that? And that's how mobile came to be.
Yeah, exactly. I mean, it feels like, let's say, if a startup is fundraising, if they need funding this month, they should start way ahead and kind of plan their way around and also think about the future runway for their startup, right? So I've had a similar challenge also where you are going through a lending process and then in some time you may want to use that for something else and you're talking to 10 different people without any idea of how it can turn out, right?
Exactly,
Yeah,
completely.
yeah. Now, what personal experience or observation pushed you toward consumer lending and financial inclusion? Like those are typically existing separately, but you have combined them. So, what's that?
Yeah, I think those are two sides of the same coin for me. And when I think about sort of, let's talk about like financial inclusion. I think financial inclusion, first of all, needs to start with understanding about money, understanding about how what money is and what relationship you have with money. And when you think about institutions or people who have typically made it financially, they're thinking about leverage in a very positive way. They're financing their way into their dreams or in their ambitions. And so the biggest ambition someone has, or the first ambition is for the American dream per se, is buying the home, buying that home owning journey. And so when I think about consumer lending and financial inclusion, those two come hand in hand because of that, and that's what we're enabling and mobile to.
Yeah, exactly. So people sometimes don't think about financial inclusion in consumer lending because they are talking about how can we provide access in terms of financial products and services to everyone. But lending is a big thing in terms of inclusion, right?
Totally.
Now, you also mentioned, and I read it in your bio and company description, that lending happens before the application starts. You believe the biggest opportunity is in that pre application process. So, why do you think so?
Yeah. So when you think about lending, and I think this is another thing about the aspect that I realize personally, is people have financial needs. Now they don't know what the product is or what the solution is, and there's this gap between the needs of the customer and what the financial products are there in the market, and that's why lending typically is broken. Let's start with the fact that I might be retiring soon. Now I'm retiring. There are multiple financial journeys because of that. I'm looking to probably downsize my home. I'm looking to probably move from New York to Florida, get some sunshine, and move or even think about retirement, writing my will. So there are a lot of these journeys that come along. But there's but when I just got pitched financial products, I don't know how does that map through. And so
Yeah,
that's the key that you want to start with. And if you just the application, the lending process, that's just a byproduct. The real thing is, okay, what are the financial needs, and how can I match that to what products or whatever the bank or the financial institution I trust with. How do I match make that and get through to support you?
yeah. And I think it's the age old problem of first find out what's the pain point of the customer, what do they want to achieve, and then offer something versus just trying to offer something and that are not quite related to each other or not matching the customer needs, right?
Yeah, just to double down on that quickly, Bhuva, I think also there's a bias in just if you in financial services that other people are financially savvy, they understand. Oftentimes
Yeah.
people don't, and it's the onus on us as a financial service institution, especially when you think about financial inclusion, to not just educate but help in that journey. A key example we think about is on the retirement example as well. Is I'm probably writing my will, right? I have two children that I would probably split my assets to. I only have one home. What can I do with that? Uh,
Mm.
I sort of locked in, and there's a financial product called reverse mortgage where I can tap into my home equity, take some money out, and give one of my child cash and another person access to the home. That's one. But I can tap into that cash and travel around the world, something that I never had an opportunity to. So that's what I think that at least from home perspective it unlocks. But there's a need and the financial product, and that matchmaking is important.
Yeah, exactly. And like I worked in investment banking for 3 decades. I had challenges to understand our own mortgage process. So even if you're financially savvy, it's difficult to understand how to navigate the system and does it meet your needs
Correct.
and does it going to work with you for the next 5 years, 10 years, 30
Yeah.
years. Typically the mortgage terms are, right? Yeah. I mean, I totally understand. Not everyone is financially savvy, but even if you're financially savvy, it's not solving the problem,
The system is
right?
made that way, unfortunately. So you gotta, yeah,
Yeah, yeah. That's why we need people like you. So, how much of the lending problem is really about behavior, fear, and timing rather than finance itself? So, money is the common denominator, but then how about all these other aspects in the lending situation?
I think my thesis and our thesis in Merble, it's primarily that, right, of fear, of understanding, and of timing. Specifically, timing is number one, because like I won't buy a home or I won't make a major purchase like I won't buy a car because it's like 50% off, right? I live in New York City. I
Yeah,
don't need a right.
I don't need it.
But if I move to, let's say, I don't know, I'm like Nashville or St. Louis or places my customers are, and I do need a car, and naturally it's expensive maybe, but I need a car, so I'll get a car. So it's about need, and timing is a big picture to that. Like, are there particular events, are there particular situations where I do need this particular financial need arising in the first place, and retirement as a given is an example of that. So it really sort of boils from there. uh, the financial once I have a need, then the money, the rates, and everything comes is a following that need. You can't sort of
Yeah.
supersede that.
Yeah, yeah, exactly. And yeah, it's very context dependent. And also, it may not be the same today versus 6 months from now, right? Things may change in my life, and that the traditional banking system may not take into account, right?
Correct, exactly.
Yeah. So, in your point of view, what are today's banks missing about customers going through financial turning points? I mean, what have you uncovered while launching Merble?
Yes, I think this. I mean, so we have different set of customers, but I can sort of talk holistically, and then let's like start with holistically, and then go deeper. Right? Holistically, what we're
Yeah.
finding is people, financial institutions don't know secularly. They're myopic in their view on knowing when customers have financial needs, and this it's structural. And the best in class, they have access to transactions. So they're saying, okay, you're spending money in Starbucks. Maybe I can help you in saving Starbucks money or whatever that is. So there's very myopic, very transaction focused, but that's only a subset of folks. But the reason why the deeper problem is that the relationship between bank and the borrower is broken. Typically, just like you're a family doctor, you're a family banker, and you would go to the branch and you discuss, and that's the banking that the regional banks and credit unions that we work with are used to. However, no one is walking to the branch; everything's online, which is fine, but that interaction layer is broken. uh,
Yeah.
Now, because that interaction is broken between the bank and the customer, and there's still trust because I'm banking with you, but there's no communication, and that's what is important, and that's what we're solving.
Yeah, I mean, it happens to me all the time. Suddenly, there will be a check in my bank account, and I'll get a random call offering me products and services that
Exactly.
I don't even need, right?
And that's
But
the
maybe I was looking for something else.
correct completely, and it's like I have a trusted relationship with you because you're handling my money. I have a relationship with you to begin with, but you're just selling me all the time. You're not listening to me. It's all being
Yeah,
told, and that's the problem in this space. So when you think about need and timing, and just going back to that conversation, Bhuva, I have a need. There's a timing aspect to that, but let's say I've declared that I need a financial product. That's when
mm,
you should sell me. But the need,
yeah,
time, financial product, that journey of me getting ready, me helping me out, optionality, that only work happens to the 0.1% that have a wealth advisor that are proactively helping. With
yeah,
AI, especially now, we can service that, give that ability to the 99%. And coming to wealth advisors, a wealth advisor will look at your assets and would help you manage that. For an everyday American, the biggest asset they own is their home. Why can't we enable them to do that?
mm. Yeah. I mean, wealth advisors are number one, very expensive, and they are for the top 1% or 10%, right?
Yeah.
Not everyone does that every day. We need someone who can look at our today's state and get us to the next milestone, right? Yeah.
And typically, this would happen, right? If I walk to the branch and I knew the banker, and that's what we learn from these credit unions. They have these relationships still on the retail
Mm,
side, and they'll be like, "Oh, your son Jake is graduating next month, later this year, right?" Like, yeah. Oh, have you considered student loan options? But we have these. Like, no, actually not. Like, oh yeah. So those conversations are the way you start to plan out financial products and financial needs, rather than saying, oh, we have a student loan at 6.2%. I'm not in the market for a student loan. In
yes.
fact, just
Yeah.
burned the bridge for me.
Yeah. Yeah. Exactly. So you have come up with this AI loan officer, right? So what does an AI loan officer actually do that's different from a traditional customer acquisition system in a traditional bank?
So coming back to the conversation we had, the traditional bank outreach, and you and I or anyone who's listening would get direct mailers saying you're pre-qualified, you're pre-approved.
Yeah.
So what it does is, in order to give a financing need, or just any financial product, there are two aspects to this. One is I need it, and second, I'm qualified for it. Banks always look at the qualification because that's the easiest thing they do. It's easier for them. Okay, let me look at Bhuva's credit score, which I already have, or basic DT, whatever income ratios, and Bhuva is qualified for this credit card. Let me, or with this financial product, let me sort of send her a direct mailer to pre-qualify. We flipped it. We're like, I can send you, I can qualify, but let's focus on the intent first. Is
Mhm.
Are you in the market in the first place? What are your financial needs? And qualification can be figured out. And what I mean by qualification can be figured out is right now the banks are acting on incomplete information.
Yeah.
Once you interact, once you sort of we learn, you start engaging with the financial institution, you the FI would uncover different things. The loan officer might understand, oh, you actually have this asset. Oh, this loan is actually you're a guarantor. You're not. It's not on your name. It was basically your nephew who signed the lease. All those things will come together, and then you'll be qualified. If you're not qualified, sure, we can help you. I can recommend you to someone else. But it starts with the intent. So that's a fundamental way we have flipped the playbook here.
Yeah, yeah. I mean, totally agreed. Because also, even if I have the intent before you qualify me, I don't know what I want sometimes, right?
Yes,
Like you mentioned, I could be a combination of asset and cash or something else. So, someone who can identify that and help me through that would be great. And then I'm obviously good to submit an application for whatever I try to select, right?
correct.
Now, earlier in the conversation, you also mentioned that the financial institution, we have a relationship, we trust them because they handle our money, right? Now, there are a lot of pros and cons discussions happening around AI. Now, how do you build trust when AI is involved in emotional and high stakes financial decisions, right? People don't trust it yet, I would say.
Yeah, I think we've seen sort of two sort of cases here where we have consumers who think about AI as just a very patient human. They can ask any non-judgmental patient human. They can ask whatever they want, whenever they want, and not be sort of criticized. uh, that's like one camp, and so there's interaction there. And the second camp is like, well, I need to talk to a human, I need to talk to someone in person. And we're seeing application on both, at least with Merble. And the good thing, so the first one is kind of simple, super clear. I can ask any dumb question about, okay, what are points, or just anything that you have read about it on the internet, you have sort of done research, or just you want to learn more. And oftentimes, if AI wasn't there, it'll be the loan officer on the phone or in person interacting with you. So
Yeah,
that's all from that first part. But the second part, where someone wants to talk to a human, now that the value of AI comes to the loan officer or the financial institution on your side. Right now, the human loan officer is is stretched thin in multiple
yeah,
different parts of the process. Not just figuring out who needs a loan to qualify and to top of funnel, but also at the late stage of closing and managing everything. So what we're seeing is with Merble, it's freeing up that capacity to do those more in-person interaction, do the things that made them interested and become a loan officer in the first place, to help homeowners buy their home or sort of achieve their dreams in that way. So we're seeing AI being used in those two different ways.
yeah. I mean, you said it rightly, right? So you said non-judgmental, objective discussion, right? So in the early stages, that's what you want. And then if there is intent, then you're going to send them to a loan officer who can then qualify them and build an application. But also trying to, have the loan officer do sales and business development and find out intent is not their job description, first of all. And also, it's not the right way to, productively leverage their time. So then AI comes and helps and works with humans to make the process efficient for everyone.
Totally, exactly. And currently, it costs a bank $12,000 to originate a loan. So
Hmm.
mortgage specifically, when I say a loan in this case, and if you can just reduce that cost, even by like few thousand to many thousand, naturally over time, those costs are being given back to the borrower.
Yeah,
So there's an entire ecosystem being benefited from this improvement.
yeah. And the cost is also going to reduce the burden on the bank, but also it's going to come back to you. You may have less fees, less time to get your mortgage, and all that, right? So it's going to be a win-win for everyone.
Yes, exactly.
Now, before I get into a little bit more about Merble and how it works, I want to quickly check in with you. I mean, what made you transition from something else you were doing into doing this? I mean, what was that personal driver or the pivotal moment that said, okay, I have to do this?
Yes. So what happened was, I think there were. It's usually not one thing; it's multiple things coming together, and you're like, and there are like different problems that finally a solution can solve. So there
Mhm.
were, I'll say, three problems two to three problems that simultaneously collided together. I think the first problem I saw personally for myself as a homeowner going through the financing process. And when I bought a home and going through the financing process, I'm like, I understand finance, I understand fintech, just this process of originating just from the outside. And why isn't it like so? Why isn't it not efficient? Like, why is it taking so much? Why are they asking these documents? And it felt like the
Mm.
game was rigged, where probably going to buy a home once or twice, but the party on the other side will probably is doing this every day and all day, and there's asymmetric information, and there's no incentive for them to play clean with me, in lack of a
Yeah,
word, right? So I just felt like not cheated, but not transparent in that process. So that's my homeowner journey burden. Then from the industry's perspective, and being in fintech myself and coming from the bank side, I realized that it's so expensive to acquire customers. And this was when I was head of product at Talos. So expensive, and we were doing high. It was a consumer neobank, high yield savings account, but it was backed by real estate. The goal was helping homeowners save, right? So, and I'm like,
yeah,
these homeowners want to save. It's an altruistic mission and sort of a vision. But why is it so expensive to acquire? And like, why is it so like? So I got frustrated from that perspective, and then finally, as I sort of dove deeper, I realized this industry is very broken. And what I mean by broken is you help someone, you spend months help making, and they remember you because you help them finance their dream home. So there's a
yeah,
really emotional attachment. It's a relationship that's for 30, 40 years, but because you make mortgages, your mortgage payment, but you're not there after at all. And if me as a homeowner need to go, I'll go to Credit Karma, Lending Tree, or any of these platforms, and then you're
yeah,
paying them $500 to $1,000 just to acquire me back. uh, Everyone's getting
yeah,
sloppy seconds and short, right? So like all these things sort of happened, and it came together to build Marvel, and AI naturally accelerated this. The need to solve this. So it's a pain point from the homeowner perspective, pain point from the bank's perspective, and just the industry alignment perspective as well.
yeah. Yeah, and many times when startups launch a product or service, it could be the best product, but the timing may not be right, or the people running the business may not be right. In this case, AI has given that advantage of a macro trend that's also enabling your passion in terms of lending and inclusion and the right solution that people have been asking for it quite some time.
Totally. And speaking
Yeah,
of inclusion, another thing, like another use case that I want to quickly highlight is debt
yeah,
consolidation.
hmm,
Oftentimes, what I have seen is folks have high credit card debt, or other forms of non-home, like just general auto or student debt. They've been paying their minimums, but not been able to like pay it off, of whatever it might be. Could be financial savviness, or just being financially literate, or just focused on even financial needs, whatever it is, whatever it might be. They don't know they can tap into their home to solve that. Uh,
yeah,
Now the messaging there is important, right? You can't say, oh, instead of getting an 8% you're paying on your credit card, or 15% you pay 7%. We rather say consolidate your multiple payments into one payment, because that's the value prop.
yeah,
And
yeah,
so and
exactly.
that translation is really important when you think of inclusion and communication.
Yeah, and debt consolidation, I've seen so many people struggle because when you reach some of the products that are offered to you to do that more efficiently, from the time you start to the time you figure out what it actually provides, it's not as beneficial, you come to realize, right? And then people drop it and then their debt continues to grow. So you have a product that you didn't offer me, but then my debt is also growing,
Yes,
it's not helping me, right?
totally, totally.
Yeah. Mm. So now, what early signals told you Merble was solving a real pain point for institutions and borrowers? So you have found a problem you're trying to solve, but then you're also building a business. So you need some of those early signals that give you that confidence that there is traction, right?
Totally. I think, and this is just my journey building again in fintech. You need to have two things that show that you actually have a need rather than. And I think from my past experiences as founders, you are always optimistic and you have happy years syndrome. You just like someone
Yeah.
said yes and like okay yes, and you just build towards it. So just my next time around, I'm like, no, I need to be not have that syndrome in the first place. So two things. First was it wasn't yes, it was heck yes, and like
Mm.
yes, like that really emotional, strong yes.
Mm.
It's like the bar should be as if you spoke to someone and they reached out to you instead of you reaching out. Like, oh, I loved your chat. Can you set up a time? Like it should be
Yeah.
that. It takes time. It's difficult, but until then, you're just pushing the boulder up and you're just
Yeah.
figuring it out. But once you get there, that's very like satisfying. So I think that happened with multiple clients at conferences and others. Like we're doing this, and someone's like, "I've been waiting for 15 years for someone to do this," and wow,
Yeah.
okay, okay. And you just also realize these are industry leaders who are forward thinking, and they've been thinking
Yeah.
about this for a while, and they're just waiting for someone to solve it, right? So
Mm.
that's and the second I think takes a step further from that is how do you convert that energy into revenue. So you got someone excited. How do you go from there to a signed contract or paid anything with money? Like they have to
Yeah.
give you money, whatever that might be, because the step from like putting money where your mouth is sort of that journey is also its own journey that
Mm.
validates the pain, validates there's a need, and doesn't matter what the economics are. You might not be breaking even, you might be losing money, whatever, it doesn't matter. As long as you're getting some revenue, those are the two sort of indications for me that like, okay, this is really needed.
Yeah, yeah, exactly. I mean, obviously there are pain points you're solving, but then what gets that to revenue traction, right? Because you need to run a sustainable business and grow it across markets.
It's
Now,
also there. I think not just that. I think it's also you as a founder. You know how to get money. Oftentimes,
yeah,
what happens is, and I'm being guilty of that so many times, is you get someone excited. You're building a product because they got excited, and because of their excitement, you got excited, and but you're not able to convert that value
mm,
in revenue, and that sales cycle of that conversion is tricky because you don't know
yeah,
how to sell, what to sell, who to sell, or like how the decision making is gonna happen, and then also you've agreed and you sent the contract. From contract to signed, people delay. There's so many delays. No one wants to proactively like, yes, let's go. So how do you get that? Because once you get it, you figure that out, and you can focus on how can I get someone excited when I meet them? Like what are the words? What's what will trigger that understanding that they understand my value prop quickly? That's one. And second, how do I convert that energy to contract or revenue? So those two things you start to learn and build on.
yeah, yeah. I mean, exactly. Because also, I've seen so many founders have free customers, free trials, freemiums, but then how do you keep the energy going in terms of monetization, right? So that's a very tricky part. And also, you're working with banks and financial institutions. They are a little bit late in adopting new things, not because they don't want that. There is so much internally that happens and they have the existing business that they have to run without disruption and so on, right? So
Yes.
what has been the hardest part of getting these banks to adopt new AI driven workflows from your perspective?
I think the decent challenges, and I'll I'll sort of say I'll preface by saying that they're slow not because they are like structurally slow, but it's more so I think that's I mean more so I think because whatever they adopt, they need to be like 100% sure like it's good, it's safe and compliant naturally for banking. I was talking to one CEO of a bank, and he said, and he's like, I'm like, I pitched Merble. He's like, well, this is interesting, but I'll let the AI thing figure out before I actually buy an AI solution.
Exactly.
And that sort of resonated two things. And he was a CEO of a credit union that is very tech first. So I don't want to name names, but it was quite uh, dissonance. Now the question here is, well, is this person not being forward thinker? That's like the first interpretation you would have. The second
Yeah.
interpretation, with the deeper interpretation, which I had, is he doesn't want to change his tech stack every 3 to 6 months, right? He
Mm.
chose a vendor, and turns out
Yeah.
6 months later, there's another vendor that's better. And I'm like, oh, I'm sorry, I've already took this, signed a year contract. Oh, so, and I sort of fall in the second category. And part of the selling you're doing is you're selling to same to investors, we're selling to banks, which is harder. The same thing of I'll keep up with the times.
Mm.
Like they're making a bet not on the product but on the product vision and how I'll help you further. And with banks and financial institutions specifically, you have to be over present, you have to be really consumer and customer first in terms of value delivery. That you had a
Yeah.
concern, I solve it for you, I'm not charging for it or whatever, doesn't matter, I'm there for you. And I'm and I'm proactively sharing like this technology happened, we build this product, and this is how it's valuing you, to showcase that we are going to keep up with the times, especially the AI times being crazy.
Yeah, I mean, the alternate, deeper perspective is also important, right? Because when you're trying to sell, if there is resistance, we need to find out what's happening really. Where is it coming from, right? And trying to address that is going to help make it a better partnership instead of trying to push when we know there are internal blockades for them to move on with the journey.
Totally. And also
Yeah.
within that as well is, frankly, banks don't care if it's AI or not. They probably think they like it's AI because they've got a mandate from the manager, the boss, or their board that what are you doing for AI? Well, we're using this for AI, right? Like, doesn't matter what it is. It could be blockchain, it could be it could be anything under the sun. It could be the internet, whatever. It doesn't matter as long as you're solving the problem, right? And
Yeah.
so let's come back to that.
Now, in doing this, what has been one success and one failure, and what are some lessons from that as a founder personally for you?
Uh, I think I would say like the success for us, and just given where we are in the early stages and the swim. I mean, it's a long journey to go, and we're excited to keep climbing this hill. What I found is we've figured out the value prop very well, and what the value we're giving to our customers very well. And a fair set of like it's regional banks, credit unions, and fintech lenders, MBs, all focused on mortgages and that home owning journey. So that's very clear. I think the failure, I won't say a failure, but more of a learning. It's always all failures are learning in general. What I found was you need to be more, the go to market has to be even
Mm.
crisper, uh, and focused on how you getting in front of someone. And that's just a learning that I've had in my journey that's being more applied now at Merble. Because especially with financial services, people don't buy the best product, it's the product that they trust. Like
Yeah.
the adage of no one fired for hiring IBM, but you're not IBM, you're just no one, in fact. So how do you build trust from day one or day zero? Even how do you build trust even before you had that conversation with this customer? And for us, what's worked well is channel partners and other folks in the ecosystem that are vouching for us, that are getting us introductions, and really being that, okay, Merble is doing something that is unique in the industry and it looks like it can help you.
Mm. Yeah, I mean, channel partners are great, especially number one, great references. Number two, you can scale and collaborate without competing, right? So, great journeys over there.
There is
Now,
challenges with channel partners. Just I know it's not rosy always. Anything's never rosy. I think it's about alignment of incentive is very important.
yeah,
That even
yeah.
takes time. So I would just encourage whoever's looking at channel partners to look at alignment of incentives because that's critical for success on both sides.
Yeah, I mean, it's critical for success for the long term collaboration and also the vision of what you bring to life together, right? So it's going to be really important. And it's also important for your customers and
Exactly.
their customers, especially. Yeah, yeah. Now, how do you align better borrower outcomes with stronger business outcomes for lenders? Because lenders have their business mandates, their KPIs that they have to hit. Borrowers definitely they have their own personal journeys, personal metrics, personal KPIs. So how do you align both so that you do a better job for both of them together?
Yeah, I think, and that's what I think. That's what the product is and will be, and how do you sort of connect these two
Mm,
customer sets together and through financial needs and financial products. So financial needs being the KPI of the customer, these are the things I care about, and the financial products and growth in that financial products from the bank's perspective. What we've seen is that, from a bank's perspective or every FI's perspective, you need to have a good understanding of what their goals are for this year and why are they uh, what's the why behind them focusing, rather than just
yeah,
simply saying, "Oh, we need to grow more loans." Like, why? Like, why did you focus on? So, example, like we have a financial institution that services is a credit union, services a university, a good university, and for them, they're like, "Well, we give a lot of student loans. Great. So we're not looking to, but the issue for them is they want to grow. Naturally, they want to grow their book, but they want to diversify away from student loans. And in terms of ticket value, in terms of long-term relationship, the other product is mortgages and home loans. Same amount of loan amounts, duration is 30, 40 years. It's a long relationship, and for them, they someone went to business school, they gave a student loan, and how to be in that financial journey after, right? So we're helping them do that. So that's the mandate from the financial institution side that we understood. Now, from the consumer side, the needs are still universal. Right? They're going through different transitions. This person might be retiring, as I mentioned, looking to
yeah,
downsize and head to the university 4 years ago, or this person recently got a great job and they're moving cities though because the office requires a return to office. So there's a need there and there's a product there, and you sort of match make those two.
yeah. And also, more importantly, right, like you rightly mentioned, they may have multiple needs even at the same time. So then, how do you offer something that's kind of bundling everything that's a need for them, but also be more, sustainable for the lender themselves, right?
Totally,
Yeah,
totally.
and that's why I think you say before the application starts.
Yeah, because I think the application is a lagging indicator. It assumes
Yeah,
that you found a person who's interested and they are willing to even get started with you, and which I think in a doom scrolling and a quick thing, you can't expect someone to sit down and like give you information
yeah.
as well. So it's too late in the process. There's work to be done before.
Yeah, yeah, exactly, exactly. Now, coming to the investor point of view, right? I'm obviously thinking that you're also meeting few investors, pitching and trying to get them on board. Now, what do investors misunderstand most about fintech and lending infrastructure today? Especially, let's say, venture capital as an example.
Yeah, I think that's a very good question. Just I think something in the industry. I think we are sort of educating the industry as well. Is that when people think about lending, people think about rates and people think about
Yeah,
underwriting. And there's been so much investment infrastructure, everything on efficient underwriting, alternate FICO scores, how can I increase access to credit or different forms of credit, and just like everything in underwriting. We believe that underwriting has a space. It has its place for innovation, and especially in AI, that's separate. But there's a separate aspect of pre-underwriting or loan origination and growth. That's where we play in, where our thesis is that every financial institution would keep their secret sauce, which is the underwriting. They will not share it, and you can launch new banks or whatever. Because if I can underwrite well, and if I can underwrite better, or I can I can make money, but you can only underwrite if the application comes in.
Yeah,
The
yeah,
first one,
exactly.
get someone in, A, and B, uh, if you can also develop that relationship first, deeper, not just first.
Mm.
uh, Homeowners might care for a 25 basis points cheaper if they've gone through the process with multiple lenders, but they have to go through the process. In order to go through the process, you have to trust someone and get that relationship and get in quickly. So all that mechanics of getting the application quick and getting that process quick, but also before that, getting owning that intent, owning that needs, product matching, and all of that before even the application. That's the space we work in. And because that's the space we work in, what we've also seen is that that infrastructure is very universal. Unlike underwriting and financial products and financial needs, that's very specific, not just to the loan product, it's very specific to the bank and bank type. The way I underwrite a home is very different from the way I underwrite a auto loan. Even a home
Yeah,
condominium is different from a townhouse versus a
yeah,
single family. LA is different from New York, right? Like it's so specific that that's separate, but the needs are universal. The process is pretty much universal-ish. So why can't we sort of keep that layer across and scale across?
yeah, yeah, exactly. I mean, so true. Also, because like we already also discussed, even if two cities are different, your personal life may be changing and the context could be changing constantly, also, right? So you need to build around that.
Exactly, correct. So just like there's variations in the loan products and the secret sauce and just the way people underwrite, the variations there, where there's a lot of innovation happening. Where the innovation hasn't happened is everything before that, and
Yeah.
that's what we're owning.
Yeah, I mean, so true, so true. Now, you have built Change for Change, that's Stripe for Donations, and you've also worked at Tellers. How do these experiences shape how you approach Merble today?
Yeah, I think what I think those two journeys were very different. Change for Change was Strive for Donation, a very infrastructure play of thinking through how can donations be moved faster, more impact first, and that was the biggest problem with any making any donations or that donation structure. Uh, People donate in dollars, but they care about impact and they want to donate in impact first way. So that
Yeah,
disconnect was critical, and that's why you can use Stripe for move money. That's no issue with that, but that plus also the tax deduction. So it was an
mm,
infra play that helped me understand the needs, the infrastructure problem with loan origination and this financial need, and helped me sort of think through that systematically. Now, Telus was the other side of the equation, which was consumer.
yeah,
We're helping everyday consumers, you and I and others, save money for biggest purchases of their life, homes being number one, but could be anything else, could be wedding costs or whatever. And it was a high yield savings account. You could sort of learn, become financially savvy, educate yourself, but also save money in that process for that goal. That made me really, the learnings from there was how do consumers think, what how do consumers interact with financial services, but most importantly, how do consumers trust financial services, and trust is key. And part of the trust involves the basic UI UX, which is standard, but also communication, explainability. There's a lot of elements there. So those two experiences just help me solve this problem from two different angles, and you need to have those two approaches.
yeah. I mean, explainability is so critical. When people talk about explainability, transparency, accountability, bias in AI models, immediately they think about, oh, yeah, you're talking about AI, ethics and responsible AI, and so on, but not necessarily. It's very much directly related to how successful you are running your business, also, right?
Correct. And with financial services, what and I think most neobanks and most fintech banks are coming into the picture of being transparent. I mean, that's their value prop, and that's why they
Mm,
attacked incumbents. The process that's least transparent is the mortgage process still. Um, and it's not because nowadays I think people are playing sort of playing a poker face of just being not disclosure because everything is online, so you can Google about it. I think just the
yeah,
process set up is you're not letting the homeowner understand that I need these. This is why I need these documents, and this is what the process will look like. This is why the process looks like this, and I'm here to make sure that everything is set up for you.
yeah, yeah. I mean, very true. Now, in terms of financial inclusion, I see that you're very passionate, but also we need to talk about fintech economics, right? So, how do you balance financial inclusion with the realities of fintech economics that's kind of really scalable?
Yeah, and so I don't think so. Those as disparate. I think coming back to your
Mm,
previous question on consumer lending and financial inclusion, those are still two sides of the same coin. And coming back to the thesis of the biggest asset someone owns is their home. Now, when you think about financial inclusion, there's definitely a debate on how do you get someone. There's debates on how do you make everyone a homeowner, which is a separate conversation. But when you think about financial inclusion, there is and the economics there, what you have to realize is, and thanks to AI, a lot of services that were left, which were services based, that it's a wealth advisory and there were services, we can productize those, and that's what we are doing. And then products become commodities, and
yeah.
when it becomes a commodity, it's just the natural state of things. I mean, I can think about any sort of journey. I mean, the best way I can think about is a phone service back. So back in the 70s and 60s or whatever, you had to go to a phone booth and like call. And I've done that myself. And where you
Yeah.
somewhere and you make a call and they'll probably connect you. So that was a service turned into a product with a telephone and iPhones and phones. And as a commodity, no one even thinks about a phone. Um, Same with checking accounts, might be a service earlier and then went to a product. Now it's a commodity. So financial financial advice and wealth advisory, all that sort of services have to come through that. So that's how I see those two coming together. Finally, talking about economics, the only way the economics work, I know that was the question, went a little sidetracked there, is to convert from services to product, because you really
Yeah.
bring costs down and increase that share. And our thesis on that is betting on the home and home related financial products.
And that also brings more efficiency and productivity, and it's good for both consumers and the businesses, right? So, obviously, it's going to be helping the economics, and obviously, inclusion is built into the product and service.
Exactly. Currently, loan origination is a service that's provided by a loan officer, returning into a product.
Yeah, yeah, perfect. Now, where is the real moat for Merble? What's your unique differentiator? Is it the data, the timing? Is it distribution? Is it your AI models or something else totally different?
Yeah, unfortunately, the way the world is being, you can't have one mode. You have to have multiple, and it's supposed to be have all of those over time. But I think coming back to just where we are, our thesis itself, we think the next banking interface won't be an app; it'll be an agent.
Mm,
And what I mean by that is it's all about owning that relationship between the customer and the financial institution, and that's why we are plugging in and we are owning that. And it starts with intelligence. It starts with uh, the data intelligence of what are the financial needs of a customer and what are the financial products the bank is offering, and to match make that. And once you sort of own that layer, then you can start to think about, okay, how can I, when do I need to talk to this customer, or what should I talk to them about? And second, on the financial institution side also, what can I share with them, or how can I help them think about new financial products? um, so for example, the customer that I was talking through, that is a credit union for university. Some of their students go and need an auto loan. That they have an auto loan division, but it's not that strong. But I can tell them explicitly, these are your students, they have graduated, they're going to these cities, they need a car. So we can definitely create an auto loan product that's more comprehensive. So those really happen once you own that data intelligence layer.
mm. I mean, you're true. These days, you need like multiple modes, not just one mode, right?
Yeah, yeah. You
Yeah,
stick the foundation strong with multiple pillars because everything can be attacked. But I think the biggest moat, honestly, coming back to our conversation, is trust. If the financial, and that's what financial services more than any other place. Financial institutions trust you, then nothing, even better models, anything, nothing can replace. Like until I mean,
yeah,
there's a significant delta, yeah, sure, but trust, which makes it harder to enter, but also harder to remove.
yeah, yeah. I mean,
People
totally true. And you're also not trying to replace humans bringing in AI, right? You're just making it efficient, integrating AI with humans so you can coexist and be more efficient and productive at the same time.
Totally. And one more thing, and we don't pitch to financial institutions is we have an AI loan officer. That's just okay. Okay, yeah, sure. I don't need a AI loan officer. I have a human here. Where we seeing, I think, interestingly, what's happening with this particular job function, that it's a career that people are not interested in becoming a loan officer. Uh,
Mm.
Only 10% under 30, and because of that, we see just see a macro need in general for AI to solve this, and we are part of that solution.
And it's also solving the shortage in the workforce to try to service some of the needs, right? Yeah, yeah,
Exactly. Like
definitely.
it comes to the fact that you have to turn from a service to a product. If the folks that we used to give that service, you need to scale up that service to do that, which you're not able to. B, less loan officers in general. You can't even provide the
Yeah,
service anymore. There has to be a product. So
there
akin to
has to
saying
be a
that,
solution.
yeah, akin to saying like the more people who want to call, but there are not enough phone booths, right?
Yeah,
What will
yeah,
happen, right? Like people want to call, people want to talk to each other because it's giving them value. So you have to have a product for them to self-serve or have technology to solve that. Otherwise, I mean, otherwise people call less and they'll figure something else out, and you just
yeah.
lock on telecommunication as a biggest that is.
Yeah, I mean, totally true. I mean, it looks like a totally different era, and we don't even think about it anymore.
Yes, correct.
Yeah. Now, as a founder, what has been the most difficult decision you had to make so far?
I would say prioritize,
Mm, yeah,
uh, and 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 I just so and that word is so heavy when I think about it, because I'm prioritizing on different levels. Not like pretty much I'm prioritizing on our vision, not vision per se, but like our initial roadmap. I'm prioritizing on the weekly, monthly work, but I'm also prioritizing daily. Like, what should I do today that can add the most value to the company, to Merple, to our thing? Um, and what should I prioritize myself? What should I prioritize the team? And I mean, that word is so heavy because of that. A and B, you don't know the answers. Like, it's not as if like someone is telling me, "Oh, sure, we should prioritize this." You don't. No one knows, and most bets are 50-50 at best. So you just need to trust and go for it. So I think that's the most difficult part. And part of prioritization is being disciplined, really disciplined. That's been difficult, especially in the world of AI, where there's so much abundance. Seeing and you're being thrown at, like, what's
yeah.
the limit and everything. It's being disciplined is difficult, but yet important.
Yeah, I mean, prioritization, sometimes you are prioritizing multiple times in the day depending on how things change, right? So, yeah, prioritization is deeply difficult. And also, you don't know if you have all the answers, but you can just make the best decision for that moment in time.
Yeah, I read somewhere, and I think this is where I think the speed of execution matters more than anything else. Is that so? I think I read it somewhere on LinkedIn or something that slow decision is worse than a wrong decision. Uh, and I've just found that like very interesting. I mean, there are a lot of frameworks for decision making, which you can always. It's one of those skills that there's no cap.
Yeah, yeah,
Becoming better, like communication, you can always become better. There's some skills which have a cap, right? You're like, okay, I've done this, and that's it. Like probably like calculus one, right? Okay, there's a cap, and that's whatever it might be.
Yeah, I mean, yeah, you obviously learn from one journey to another journey, but then you have to first take that journey, right, to
Yeah,
make the decision to move forward. Yeah,
and I
I mean,
think
couldn't agree
learning
more.
by doing,
Yeah.
learning by doing is so important, extremely important, because
Mhm.
I feel like, at least me, or just generally, I've seen people overestimate how much they've learned by reading and underestimate how much they learn by doing. Because once you do, it's so internalized with you that it basically becomes your gut reaction, and that's very strong. Whatever you've felt, whatever that's happened by reading.
Yeah, I mean, definitely, definitely. And also, it's really important, right? Like you mentioned, if you don't make the decision, then you never know. So instead of trying to make the perfect decision, you just move forward.
Yeah, exactly, and you'll get 50% of calls wrong minimum, and just go from there. That's part of the job actually. So you will get
Yeah,
decisions. You have to. I mean, if you're not getting them wrong, then uh, like you're not really like pushing or thinking. So it's a difficult balance.
yeah, yeah, no, definitely. Now, 5 years from now, how will AI change the relationship between consumers and financial institutions? Asking you to do some predictions here.
Yeah, all my no, I don't. Yeah, predictions are weird. At least I see myself, and just, this is the bet Merble is making as well as ourselves. But in general, the relationship between, I would say, there again in two camps. There'll be a set of consumers that really are empowered by AI and own their financial journey end to end. Uh, that I think that's a set. These are the folks that are uh, changing credit cards for points and maximizing points and really just on top of that financial savviness. Um, but but I see the majority, I'll say like 90-95% of humans slash Americans, their relationship to finance has historically been, I just want to make sure I'm like, it's like your health or weight management, whatever it might be. I'm fine. I don't want to get bad, right? I don't want to like be the most fittest person, but I'm like, I don't want to get bad. I want to be healthy and I want to be good, like same
Yeah,
financially, right? And as part of that, what historically you would do is you have one or two institutions. You're like, okay, I'm banking with XYZ, and yeah, it's all good, like whatever. I just feel where Merble is also fitting is like you supercharge that, where you're becoming you're becoming fit without you knowing it. Like you're becoming financially fit or healthy without you knowing it. You don't need to be actively involved, uh, and that's the future I see. Where, of course, the top 5% of people who want to be super into it will have their own ways of hacking and using AI or building their own solutions or leveraging solutions for that. But the rest majority will sort of rely on the financial institutions to basically keep them on autopilot for their financial goals.
yeah. I mean, if I can not get bad, but not even get the best, but be better, that's good enough for many people, I think, at the moment.
Yeah, and you can keep getting better. I think it's one of those things that there's an unside uncap, and you're just sort of moving
Move
ladders in the
step
financial
by step.
journey.
Yeah,
Exactly. But you are not actively involved, but it's happening for you automatically. I
yeah,
think that's the difference. But instead of you being actively involved is just a sliver. It's happening for you automatically, whatever the goals are. And part of that is also educating on the goals. Like, did you know, um, like you've thought about home ownership? Let me help you there. Like, and let me just automatically get ready, make you ready towards
mm,
that journey, whatever that journey is, or whatever financial journey you want to take on.
yeah, yeah, exactly. And also, we are kind of coming up time. I have one last question for you. When Merble succeeds at scale, what fundamentally changes for everyday people navigating financial uncertainty? More like a systemic change.
Yeah, I feel the biggest one is people have really good appreciation, understanding of financial, like what finance is, or like what personal consumer finance is, uh,
Mhm.
because that learning. You can learn, like going back, you can read about it, you can learn about it, you might get a aha moment. But just like health, you get excited, but then you go down, and there's this sine wave and curve. The I think the biggest step change we're giving to everyone is you're becoming financially healthy without
Mm.
doing it. Right? I think, uh, and that's what the AI loan officer is doing. Coming back to the biggest purchase you're making is your home, and the biggest security you have. And finance for a lot of people is not the dollars in their bank account; it's security at the end of the day.
Yeah.
So coming back to like, okay, I don't want to be the most healthiest person, but I don't want to go to hospital, right? Same like that. Okay, I don't want to be the best, most the richest person in the world, but I don't want to go bankrupt. Like I want to be able to enjoy my life or whatever my goals are, right? And we want to enable that to everyone.
Yeah, I mean, like you also rightly mentioned at the start, it's really important to meet people where they are. And once you build the trust, they are happy with what you have offered. You do not have to go and ask them or sell them a product or service. They're going to come back to you telling, hey, I was so happy with the support you provided last time. I have a different situation now, right? So that's what we are aiming for.
Yes, exactly. And you can do that at scale with the AI. You can do that better,
Mm.
faster, cheaper, but also trust first. Totally trust
Trust
first.
first. Yeah, yeah, exactly. Thanks so much, Shivam, for joining us. We're kind of at time. Is there anything else you want to share with our audience? How can people connect with you?
Yeah, LinkedIn is best. Definitely, you can search for my name and Merble, and I should show up there. And please connect with me, and happy to help you and help any all the listeners in any way they want to.
Thanks so much, Shivam. Speak soon then. Thank
Thank you.
you.
Thanks so much. Thanks for the invitation. Bye.
Bye bye.